is looking at to make sure that you're following the plans of what you set out to do. So that's very important that you don't just have a business plan and leave it there. Keep your business plan simple and clear. Show that you've researched your industry, differentiate your business, and you provide details on how you operate your market. What is very important for persons looking at this, and sometimes they just skip to this first, is your financial statements. So, as I said, you can have the best marketing, the best operations plan, but if your financials don't support it, you're not going to get investment. So make sure that you have your financial statement. What may happen too is based on Jamaica and based on how our credit bureaus are, if it it doesn't show business accounts as well as it should. So if you are trying to get financing, what may possibly happen is that they're going to look, well, it will happen. They're going to look at your personal credit. So they would have to pull your personal credit and see how you've been paying back and how you've been doing in your personal life as well as with your business. So you have to make sure that you in your personal life, you've been paying your bills, if you have a credit card, you've been paying your credit card to show that you are financially responsible. So you're also going to have an income statement, which is going to show your net income and all your business expenses from the revenue. So you want to show that the company is bringing in enough money to pay its debt and obligations and still be profitable, right? Now, the balance sheet shows the financial health of the company during a given time period. So as I said, the balance sheet is a snapshot and it shows, okay, at that time, this is how the company has done. So it shows the company's assets, what it owns, its liabilities, what it owes, and the owner's shareholders' equity. And that's what's left after liabilities are subtracted from assets. Then you have your cash flow statement. If you're already operating, it's going to tell you the amount of cash that you've earned and spent during a specific time period. So you're also going to want to have your project. If you have, well, you're going to have your cash flow statement because you guys would have already had your projected startup costs because you're in business already. So you have to, for the projected cash flow statement, it lists the expected cash in and cash out for future time period. And this you should do for at least 2 to 3 years. And then you look back on your previous financial records to try to anticipate any future trends that you may have. As I said yesterday, your numbers don't need to be perfect. They're not going to be perfect, but they need to be comprehensive and they need to be realistic. All right. Another thing is when you're looking for investment, you're going to need to think about what other collateral you may have. And collateral means any other assets that you may be willing to use to secure. If it's a loan you're trying to get, what other assets you have that can secure that loan. So you should already have those things to say that, okay, if the bank asks, this is what I'm willing to put up to be able to secure my loan. All right, so that was just a kind of a short recap in terms of the statements and what we went through yesterday. Did you guys do yet in accounting, did you guys go over the important business ratios that you would need to know? All right. So in terms of your business ratios, what is very important is that you make sure that you know for your business what your break-even point is. So what does your break-even point tell you? Your break-even point is how much money you need to cover all of your fixed and variable expenses. So it is the point where your costs equal your revenue, right? So I would want you to always you'd have to go into your income statement and you have to look at your revenue, look at your cost, and find out where that break even point is for you. Then your profit margin is the amount of money your business earns after paying all its expenses, right? So it's calculated. You're going to look here at your net income over your net sales to be able to find what your profit margin is. All right. Let's give me 1 second. All right, so for this part of it, you all need to tell me, or I can switch to something else. Are you guys able to participate, or you're not able to participate? Because it's that's the only way I can do this part of it. So let me know so I know which way to go. Because I know some of you guys are on the road going to different things. So let me know how to go forward. Nita, Tanisha, Tashana, what should I do?
You have my participation now, miss. So sorry about that.
Okay, yeah, thanks, that's fine. I just need to know if I have enough participation or if I should try and do it a different way because it would require participation.
Indeed, Miss Tanisha said in the chat that she's not able to participate.
All right. And then I know
Matthew is on the
Matthew on
road.
the road. And Tashana had told me that she would have been on her way to an event. What she was talking about yesterday, the signing, the cutting, the ribbon cutting. All right, let me see how I will do this. All right, so I kind of wanted you guys to get an understanding of when you see these terms, you know where you would place them. So I will just go over them and let you know where they would be. All right, so for instance, we have revenue here. So revenue would be placed in the income statement. So if somebody were to say, have you earned money in the past 30 days from selling a product or service, you will know, okay, they're talking about my revenue. And that is your top line income before any expenses, right? And then to match it back, you have to think back, okay, where does revenue fall? You know that your revenue falls in your income statement. So that is going to be the first line in your income statement. All right. Let's see. So in terms of if somebody had well, let me ask you, Nita, if somebody said your inventory, would you know which statement that falls into? Where would you find your inventory? So your inventory, it would be your product or your goods that you have held for sale, right? So
Right.
right. You know which statement you'd find that in?
I think, miss, just a moment.
Mm-hmm. And it's an asset. So your inventory is an asset. So where would you find your asset?
On the balance sheet.
Yes. Yes. So if somebody asked you, so if you went, you're talking to somebody and somebody asks you, okay, tell me your equipment, show me how much equipment you have. You're going to pull out your balance sheet and you're going to show them that this is under assets and that's the equipment that you have, right? Sorry, inventory that you have for sale. Equipment also falls under the balance sheet, right? So if what was the other one there? If there was a loan is categorized as borrowed money to be repaid. So is a loan something you own or is it something that you owe? And own versus owe, where does that fall?
No, loan is definitely a liability.
Oh, perfect. Perfect. And where do you find your liabilities? In which statement? So that would be your balance sheet also.
Question again. What are the three main statements?
Okay, so we're looking at income statement, we're looking at balance sheet, and we're looking at cash flow. An income statement also called profit and loss. All right, so your liabilities fall under your balance sheet because it's your balance sheet is assets minus liabilities, and that is what's left over is your owner's equity. All right. Let me see what else we have there. Do we know what interest is? And where interest will fall? So interest is the cost of borrowing. So that would be, so an example would be the interest on a loan, and that has to be under your expenses because your interest is an expense. So when you're looking at your expenses are in your income statement, right? So it's your revenues minus your expense, and then you're able to get your net profit or your net loss. So it would fall under your income statement under expenses.
All right. Can you repeat that one for me, Miss Shani? What would fall there?
which one was interest? So interest would be the cost of borrowing. So you would have to put that as an expense. So when you get a loan, you pay a certain interest on that loan per month. You're going to have to know what that interest is, and you're going to have to categorize it as an expense on your income statement. All right, actually, since I'm doing this little different, let me share this part with you so that y'all can see. Okay. All right, so I'll do it differently so that y'all could kind of see all together and it's not back and forth. All right, so your income statement shows a business revenues, expenses, and profit or loss over a period of time, right? So how I'd wanted to do it was that you all would see those terms, and then we would categorize them and come up with where they're supposed to go. But we'll do it the other way around. So if we were to see revenue, we know that revenue is money earned from sales or services. And that's the first thing you're going to see on your income statement. You're going to see your sales and you're going to see your revenue. So you're also going to see total sales of goods or services, right? And then product. Product is physical items sold that generate income. So that's also revenue. And then service is income from services rendered. So all of these terms, when you hear those terms, you look to your income statement to find out what that figure is. Or when you're setting up your income statement, that's where you're going to put all of your revenue, right? So expenses now, you're going to have expenses such as rent, you're going to have salary, you're going to have utilities. As I said before, you're going to have interest, and then even bonuses, because bonuses are extra rewards or payments that you may pay out, whether to yourself or whether to your staff. So that comes as an expense. And then your profit, it's what's left after all of your expenses. And you're going to be in a loss if your expenses exceed your revenue. So you have to, what would be good is if the software that you're using, by putting in your invoices and by putting in your expenses, and I know certain versions of QuickBooks would do it. It will come up with your income statement without you having to put all of this information in and without you having to put it in Excel. And that's why it's so important that whatever software you're using, it does income and it has your expenses and you're able to put in your invoices, which will show your revenue. So that you don't have to manually go ahead and do this. But if you do have to manually go ahead and do this, this is a simple way to do it. Your revenue, everything that's coming in, and then you put everything that's going out so that you could get your net profits or your loss. So don't overcomplicate things. You just need to know what is happening in your business. All right. Your balance sheet now, your balance sheet shows what the business owns, the assets, versus what it owes, the liabilities. And then what is left would be the owner's equity at a specific point in time. So cash is an asset. So, and that's the most liquid asset. So cash is going to be at the top always of your balance sheet, okay? So physical cash or money in bank. So if you hear bank, you know that would be your bank account balance, and that also is an asset, and that is part of your cash because what's in your bank, it's very liquid and it's easy to come out. Another one, not here, but what you would see is your accounts receivable. That will come under cash because that's what persons owe you coming that's supposed to be coming in soon. So if you had to liquidate your business, those are the first two top line items that you would use to be able to get cash quickly. All right. And then we went through, we spoke about equipment and we spoke about inventory. I had bike in there because a bike or any other supply would be considered an asset, and this one in this circumstance would be considered business equipment, right? So you'd have that there as an asset. Invoice, money, customers. Oh, I spoke about that already. That would be your accounts receivable. Then in terms of liabilities, you're going to have borrowed money to repay any amount owed by the business. And your assets minus your liabilities, you're going to get your equity. So if you see your owner's equity, you're going to have your business, that would be the business owner's value or interest. And then the capital, on the other hand, is money put into the business by the owner. So these are all things that you're going to see on your balance sheet. And these are key terms when persons are talking to you that you know you have to you have to know in your head that, okay, they're asking me about cash, they're asking me about an asset. Where am I going to find that, or where am I going to point them to show them that I understand my financials, right? The cash flow is pretty simple. It is your cash inflows minus your cash outflows. So the terms that we had up there were customer, we had tax, we had employee. So when you think of customer, you always think about that's money coming in, right? So your customer is going to be a cash inflow. So that's going to be sales from customers. So that's always a cash in. So anything you're getting in from your clients, from your customers, that would go into your cash inflows. What's going out into your cash outflows is payments. So payments like your tax payments, payments for salaries. So your cash flow is also is always going to show everything that's coming in versus everything that's going out, right? All right, you all have any questions in terms of those statements and where to put what? Like, do you totally understand where you put everything?
Miss Shani, since you love us so much and it's like only me alone answering you for today, since everyone is a bit busy, just go fight a little more for me,
No,
man.
man, no, man. Nobody go and talk to man. They are, they are checking.
All right, okay, no problem.
But yes, what I get what I be saying, Miss Shani, and what would help to also is to get a quick rundown of it. This and that go that statement, that and that go that.
All right, no problem, no problem. All right, give me 1 second. I think I have it on. All right, I'm gonna go through this one. All right, so let's look at how your income statement would look, right? So the first thing you're going to have on your income statement would be your revenue, everything that has come in, right? So that would be, so if somebody asks you your revenue, it's going to be your gross sales, right? Your gross sales minus anything that customers may have returned, because you would get in that money for your gross sales, and then your customers might return it, and then you have to now subtract it from that, right? So your revenue is your net sales, right? Your gross sales minus any returns or rebates is equal to your net sales. So think about it, revenue, net sales. And then you're going to look at your cost of goods sold. And we spoke about that yesterday. So based on whatever you're selling, how much does that cost you to sell that item, right? So it would be, how much did you purchase that item for, right? How much was the labor expense? How much, as I said yesterday, how much time, how much is your worth if it's a service that you're placing on that cost of goods sold, right? So you're going to look, so that those will all make up what the cost of goods sold is for your product. And then you're going to get from that, you're going to get what your total cost of goods sold is. And from that now, your revenue, which is your net sales minus your cost of goods sold, is going to tell you your and minus your expenses now. So you look at all the different expenses that you have. So I'm not sure in terms of, you guys would know your expenses, right? So do you have a physical location? Are you paying for rent? Are you paying for internet connection? Are you paying for your telephone service? Even, and these are some of the things that you do need to expense as a business expense. So you may have a personal phone and you're like, no, that's a personal phone, but are you using it for your business? Then that becomes a business expense, because when now you have to file your taxes and do all of that, you're able to portion it as a business expense. And that's the same kind of thing for utilities. Like if you're a business and say you're working from home and your JPS bill is $10,000, you can say 40%, 50% of this bill should be expensed to my business, right? And then when you're filling out your taxes, you put that portion of your bill as an expense, right? So a lot of things that you may use, like your vehicle expense, if that is what is being used to go to clients, then you expense that and you expense that on your taxes. So you have to make sure that you're portioning your expenses properly so that you can now claim those as business expenses, right? So some different types of expenses would be rent, internet, telephone, salaries, office supplies, office equipment in terms of depreciating. So that's another level to it. If you have office equipment as an expense, you have to you can be depreciating your office equipment and putting that figure in there as an expense for your business. right? So any maintenance, any delivery expenses, right? You would put all of those in as expenses. And then there comes sales and marketing too, in terms of expenses. So are you paying for advertising? Are you paying professional services for marketing? So once you've listed all of those, you have your total expenses, and then you will have your income before your taxes, and then you put in your tax expense, and then it leads into your net income or loss. So this sheet, I think I shared it underneath my section, but if I didn't, I will share it, because this shows your income statement, it shows your cash flow statement, and it shows your balance sheet. And you could also do your sales projections and everything in it. So it's a sheet that you could kind of play around with, and it has the formulas attached to it already. So once you start entering, it's going to sum up everything for you. So I'm going to look back and see if it is in there. If it's not, I'm going to place it in there for you guys. All right. So that's your income statement. You guys have any questions on what goes into your income statement? Nita, this is a bit clearer for you? And it is something that I am going to give you guys so that you can see.
Yes, miss, it's a bit clearer for me, miss, as we got a little deeper dive in the accounting and taxation session. I just needed a
Okay.
little rundown, you know?
Okay, great. No problem. All right. And then this would be your balance sheet. Your balance sheets, your current assets, so your total current assets, and then you have your fixed assets. So current, what I was saying before, current would be like all your cash, your accounts receivables, anything that is it's easy, it's liquid, you could get that in quick. Then you have your fixed assets, which would be your vehicle, your equipment, your buildings, those sorts of things would come under your fixed assets. And then so assets, and then you have your liabilities, your current liabilities versus your long-term liabilities. So how you categorize your balance sheet is based on, for assets, the most liquid thing which is cash. For liabilities, the what can be paid the fastest. So you always categorize it that way. So you would see under liabilities, your long-term liabilities are what comes at the end, because those are harder to repay. Well, not harder, they take longer to repay. So that's how you categorize your stuff. So you have your assets, your liabilities, and then you will be able to work out what your equity is. So what investment capital do you have? What your accumulated return earnings are, right? So that's what your balance sheet would look like. And then your cash flow. So your cash flow, as I said, your cash flow is your inflows versus your outflows, all right? So what are your total inflows? Your cash, your accounts receivables, your loan proceeds, all of those things it would be under your total cash inflows, and it would be your available cash balance, versus what are your outflows in terms of, and outflows are broken into operations. So operations is looking at your rent, your salaries, your inventory, all of those things. Then your admin is finance and admin, and then that would look at Remember, we had spoken about the interest before. So it would look at your interest, it would look at your taxes, it would look at all of your bank charges. Those are the finance and administration fees that you're paying. And then you look at your sales and marketing, and that would be your traveling expenses and your associated sales expenses. Those will all come under your total sales and marketing. So these are the three main main statements that you'd need to know, and you would need to know where everything falls. And that would be your cash flow, your income statement, and your balance sheet. All right. So I would definitely want you guys, when anybody's talking to you, to be able to be financially literate in terms of being able to speak properly to these three. So the best thing to do is to just go into them and see what falls under what, so that you can have a little better understanding of it. All right. Give me 1 second. Let me. All right. Do you all have, before going to the next thing, you all have any questions with that?
No, miss, no, miss.
Okay.
Could you repeat, Miss Shani?
No, I was just asking if you had any questions.
Also.
All right. All right. So in terms of just looking at the financial aspect of it, this is also on Google Classrooms. But making sure this is a checklist for business sustainability. So I will just go through the financial management piece of it. And these are things that you would need to make sure that you incorporate into your business, right? So the first one would be that you need to create and monitor your cash flow projections, right? So you did it in accounting. I just showed you again here in terms of what your cash flow should look like. So that's the first thing that you need to always have. If you don't have those other statements, you need to at least know your cash inflows versus your cash outflows, right? Next is, if you have reached a point where you need to get credit arrangements, you need, whether it's a loan, whether it's a credit facility, whether it's an overdraft facility, you need, do you need to utilize credit arrangements? But when you're doing this, be very careful of what interest rates the banks or the lenders or wherever you go would offer you, because that goes into the next one. You have to monitor those credit relationships and monitor those accounts and those interest rates to make sure that you're able to pay on the agreed terms, and try and pay those pay off your balances. Don't have balance, and trust me, I've not paid my balances and it's gotten me into problems, you know, so it happens to everyone. So you have to make sure that you are good with those types of facilities, and if you don't think you are, then that's not the way for you to go. All right. Other thing, make sure practice proper record keeping. You have to always communicate. Communicate with your bank. Communicate with lenders if you have any sort of payment issues, right? And try from early. Once you do your finances, once you understand what's going on in your business, you can identify sources for early business funding. So you look and you look and see what grants are available. You really make sure that you're looking within the system to see anywhere that can help your business. Because as I said before, grant funding, I believe it really is the best way to go in terms of trying to build your business, right? So maintain a good balance of debt versus equity funding, because with debt funding, and you have to know what type of funding your business is ready for. With debt funding, you take out a certain amount of money and you pay that back per month, right? So you pay back the interest first, and then it starts paying back on the principal. With equity funding now, equity funding usually is somebody coming into your business and they take a percentage of your business. But usually what happens with equity funding is that they also provide insight and help into trying to move your business forward, right? So you have to know if you're willing to pay interest rates associated to debt, or if you're willing to give up a piece of your business that's associated with equity. So you have to balance that out. And sometimes persons are afraid of equity funding because they're like, oh, I don't want to give up a piece of my business too soon. But sometimes if you're looking for rapid growth and that's offered from an investor, it may be feasible. But I would also say is that if there's an investor, but you all don't have the same values, and you can see certain things about the investor that does not work well with you, do not have them invest in your business, because eventually those value systems, those things are going to come up and you're going to realize that it was not a good match. Okay? So you have to look at that when you're thinking about balancing your debt versus your equity. Make sure that you regularly review your financial ratios, and we will look at some of those ratios. Make sure that you know what your financial performance is. Have you all reached the stage in terms of tax compliancy? So for the funeral homes, do you file your taxes? Or for Jamaica Bike Life, any of you?
A little bit, miss. I try to be compliant, though I do
Oh, I
have
haven't.
I do have a e-service account with the TH with taxes, right, with TAJ. So I log on now and then, and I try to be compliant, as compliant as possible. I do not have a TCC just yet, but yes, I try to be as tax compliant as possible. However, I do owe them a little sum of money now that they're saying that some stuff that I need to go and talk to them about. I was talking to someone from there, and they had opened some avenues for me to explore that, so I can be a little bit more tax compliant.
Right. And that's something that you don't Yeah, you want to make sure that you are tax compliant and that those fees and those penalties don't start adding up for you, right?
True, miss. What happened in a miss was I did not know that it's okay to file a nil because sometimes
Yes.
throughout the year you get a one service, a two service, a three service, and you do not generate any money. As I would have spoken to the person from TJ that I do not have any employees currently. I contract out every single thing. The entire operational side of the business is in contract. All I do is have a quality assurance, and that could be me as well, that I would, do all of that. So, but I did not know that I was to file nil, and that caught up to me with 2 years. And then
Wow.
I had to sit down with them, and now I'm in talks with them to see what they can do to try to alleviate the pressure on the business and on myself as well, and on my personal finances, because they as explained to me that no, because it's a sole trader business, we both share this similar TRN, if you mean, with just a
Yeah.
different by a digit. So any financial transactions, it affect my personal financial stance as well. And I have to be checking my credit score constantly, not because I want a loan or anything like that, but because I am a bit paranoid when it comes down to being tax compliant, as I have received a lot of demand notices, and I had to just, reach out to them and let them know that, hey, this is not the case, and wait, I didn't even know that. If it wasn't this program, I'm telling you, this program is just a life changing. I didn't even know that I need to audit the bank accounts and all of those stuff. All of this is just new. I just thought that I had a business bank account. My business is registered. I am not in any more talks with the government. That's it. As I would have said, I contract everything else out, but I
And
guess.
listen, you are like so many other people. It's not you alone, because you telling me this, it's actually normal, and it really shouldn't be normal. I think there needs to be more education in terms of when somebody registers their business, in terms of what all of the other next steps are, and especially with being tax compliant, because um as he said, all you had to do for those 2 years was go onto the portal and and put your that you haven't made any money, right? And then that's why also it's
True, miss.
important that you know what your expenses are, because you could be
They don't
making
educate us
cash
about these
revenue,
things. The
but
penalty,
your expenses are
penalties,
so
you will
high.
collect more money from penalties than anything else. So they don't mind if you register your business and it
True,
expires, you don't
Matthew.
pay your
True,
fees or
true,
your
true,
taxes.
true. The people want to,
It's like the
you see,
system set
because
up
it's
that way.
5,000 a month, it's or something like that, 5,000 a month is the interest for the amount of taxes you owe. And let me tell you, them not giving an education on that, bro, for real. They want the
System
money just
set
a
up
pile up,
away.
a pile up, a pile up.
Right. And even the same thing for when we did the business account for Bike Life overseas. They never even, as a first time creditor, never even let me know the time frames that the credit's supposed to be paid and the percentages, to spend and stay with it and stuff like that. Like all these things is avenues for people to mess up on where them can collect. You know? So it's our responsibility to really say we have to educate ourselves about this. What I want to ask Miss Shannon, is what is the situation with taxes in Jamaica and businesses that are registered in the States? Waiting for your job, bro. What do you feel about your job?
It, how is it registered though? Is it registered as a
So Cell Life initially was registered as an LLC in the States for the first year.
and is it still registered like that?
No. So the registration expired, and what it is was more finding a business structure that better suited our intentions rather than just rushing and and doing an LLC. You know, that was all done before the understanding of better structures towards what we want. Set a business structure, you know, like a social enterprise or something different. So now
Okay.
it is not. And moving forward, we want to know like the best way and most efficient way to contribute to what we want to do. Which I don't think is an LLC right now.
All right. Why wouldn't it be why wouldn't you want to have a LLC in the US?
Just because initially we were more charity based, right? So
Okay.
there was not, we weren't selling things and making money to turn to put back into the business, right? Everything was more directed to collecting and charity, you know?
Okay. Okay. So the first part of that is that if you're registered, well, you're not registered anymore, but if you were registered as in a foreign company, legally to be able to conduct business in Jamaica, you should have a branch or locally incorporated company in Jamaica, right? To be able to conduct business in Jamaica. I mean, obviously, yes, you can because you've been doing it, but just in terms of the right way of doing it, it would still be that you go to the company's offices and you would show them that you're incorporated in the US. But I think if that part of it is over, is there a reason you did not want to do it in Jamaica? Because I think it may be easier for you to just do everything in Jamaica. What were you trying to get away from? Because one of the implications of having it both is that you, in terms of the filing of the taxes, that's where it will get messy.
To have it overseas but conducting business in Jamaica at the same time.
Yeah, because both of them are going to want taxes from you.
Right. So things like that, you know, was also my concern. And
Mm-hmm.
seeing where is it better to register from depending on the works that you be doing, you know.
Well, for me, I think most of what you do is in Jamaica, right?
Yeah, I would say maybe 60% because I still travel and do the same, you know. I still
Mm-hmm.
travel and do the same. So maybe it would be a thing about having two different businesses, one for the States and one for Jamaica.
Yeah, you can do it like that. You can do it like that. And keep your Jamaican business separate.
Separate.
Mm-hmm.
Understood.
Mm-hmm. All right.
Thank you.
No problem. Which one was I on? Oh. Okay. All right. So make sure too that you're paying your, as well, we went over being tax compliant, paying your bills on time. If you are selling, make sure that you try and you have discounts, you gain discounts by buying in wholesale. A lot of persons, and I know this one is hard in terms of creating an emergency fund. I know creating an emergency fund is always hard when you're living day by day and you're just trying to get your bills paid. But if you do reach that point where you can do that, try and create that fund because you never know what is going to happen, right? Make sure that if your business needs insurance, that you have insurance for your business, right? And also creating an investment portfolio. That is the only way. Having a savings account, having an emergency fund, those things are fine. But in terms of creating wealth, the only way to do that is by investing. So whether it is that you're, whatever you invest in, whether it is that you're investing in stocks, bonds, real estate, that's the only real way to grow your money. And you don't need a lot of money to start doing something like this, right? So always try and take a little aside to start an investment portfolio or to add to an investment portfolio. All right. And trust me, I'm saying it does not take a lot to do it. It really doesn't take a lot to do it. Always look out for new companies that are coming out. So for instance, they are doing IPOs. IPOs are initial product offers. So they come out. So like for instance, when back in the day when Fontana came out or when Wistinko came out to the public, sorry, initial public offerings, that's what it is. When they came out to the public and said, okay, they're now going to be public and you could buy shares in my company. That's something that you guys should really take advantage of because if you choose wisely and you choose good companies, you can make great gain off of doing these, right? Any of you have investment portfolios?
Yes, miss, a small one with Trans Jamaica Highway.
Right, that's a good one. That's a good one.
Which one is that, Abby?
Trans Jamaica Highway. Them new IPO
Yeah,
just closed the other day.
I don't have any. I
No.
invest in children.
You invest in what?
In children.
Well, no, that's a very good investment. But you know, sometimes you want your money to grow a little. So
Yeah,
uh,
man, definitely. The
yes,
world of business is in this channel. I was so separate from it as a creative lead, you know. And I tell people all the while I don't like dealing with money. I like talk about it. I like have to deal with it. The more I get involved in making a solid future, it's just the more you have to entertain these people and understand the world of business, you know. And it's all
yeah,
very interesting. It's a lot too, you know. But when you get into it, it becomes something nice, you know, like a foundation thing. This is something that you're supposed to know and supposed to, just like basic knowledge should be.
yeah, definitely for sure. Um, and I get your point. You know, you don't really like talking about money. You don't, but that's the only way that your business is going to be sustainable, and that's the only way you could help who you need to help. So if you're not making money, there's no way that you're going to be able to fulfill your ultimate goal.
I mean, and it's one thing for me to make money and earn, but that will keep me having to contribute from my pocket every time, you know, rather than
Exactly.
creating and generating it through a business. That was my thing. It was always me. But we have all these things to do business and not doing it, you know. So that is
Right.
what it's here.
And as you say that, it's always good for your businesses, no matter what stage you are, to have an advisory board. So to have a group of people who will help you with key decision making. So if you know that you're not that good at finance, you look for somebody who could be on an advisory board for your business, and then they will help guide you in financial aspects. If you know, okay, marketing isn't my strong point, you look for person. So like you build a team. And the thing is with the advisory board, different from a board of directors. An advisory board, you don't have to pay an advisory board, but they just have to believe in your business, believe in your dream, believe in your company, and be willing to be on that board to help guide your company, right? So I think that is so important for small businesses to have.
Yeah,
So
Miss Shani, I think you were supposed to be on the team from the last cohort. I think that what was happening, you know.
yeah, but I
I
never hear
just
I never
I
hear
get
from that.
traumatized. Let me tell you something, I end up in a hospital, man.
Yes,
But
yes.
yes, you're right. And I still would love to come and sit with you and show you what we did too. And see
Right.
how we can help, you know?
Yeah,
Yeah,
for
man.
sure.
Definitely.
So that's what I'm saying. Like all just use what you have, who you have available to you, what you have available to you, you know? So there are persons out there who would be very willing to help to make sure that your businesses grow. So you go out and you choose those people who you know would be good for your business, because they might come on now, help grow your business, and then you change that relationship with them, you know? So I think that's always important, to have a team of people who know more than you. You know, if it's like in business and in work, I love hiring team members who that know more than me, you know, because then why
So
am
well, you
I
have to can delegate, you know, as a
right?
business manager. You have to be able
Yes.
to can delegate.
Exactly. You want people who, in certain aspects, you would know more than them in terms of the operations and in terms of, you know, how to put it together. But then you want them to know more in terms of the things that you're falling down on. So building a proper team is always, always very important. Okay. All right. Um, So what going to show you guys here, and it would be, oh, what happened? Okay, so this is just going to be a tool that you can use now once you have all of your statements together, to see where you're at. So these are some key statements that um you're going to need to know in finance. So you're going to need to know, are you profitable, right? And what is going to show you if you're profitable would be your gross margin, which would be your gross profit divided by your sales, right? Your operating profit margin is your operating income over your sales. Your net profit margin is your net income over sales. So the profitability margins, just think about them as whatever you're trying to figure out over sales. And then you'll be able to see if you're profitable or not. Your liquidity ratios, on the other hand, are your current ratio and your quick ratio. So current ratio, current assets over current liabilities, right? And then your quick ratio is your current assets minus your inventory over your liabilities. So everything is always under liabilities. Operating ratio. So these are, I'm not going to go through every single one of the operating ratios, but you have your inventory turnover ratio, your sales to receivables, your return on assets, and your return on equity. So these ratios would help you know if you're operating efficiently. All right. And then a pretty good one to know is your solvency, which is your debt to worth ratio. So in terms of what you're worth versus what your liabilities are. And then your working capital, which would be your current assets minus your current liabilities. So these would be, if you now have an accountant, or you're able to get a little bit more familiar with your financials, you can go in now and do these types of calculations to see how your business is doing. And as I said yesterday, make sure that your accountant, if you have an accountant, whenever you reach to that stage, make sure that your accountant is sharing everything with you. You need to have an accountant who can sit with you and explain all the things that need explaining. All right. So don't just have somebody who's doing your books and not able to communicate and to show what they're doing for you. All right. So as I said, they log in, if they have to log into that TAJ website and they're doing something for you, make sure that you understand what they're doing. I recently heard I had a client, and this isn't new. I had a client and he did not know his TAJ login, and every year he is paying over his taxes to his accountant. He's given his accountant the checks to go and pay TAJ. And for years the accountant just wasn't doing anything. So and these taxes are big taxes. So it's big business. So it's like $8 million and stuff he has to be paying over. And for 3 years, nothing is being paid over. So until he gets audited, and he calls the accountant and it's like, why am I being audited? Only to find out that the accountant has never paid the taxes over. And he has never had the login from before to know what the accountant was doing. So don't get into those type situations where you don't know what is happening in your business. Okay. All right.
Okay, Miss.
Any specific questions you have for me?
No, Miss. Crystal clear, Miss.
All right.
Yeah, all good so far. Just I keep the service keep cutting out, so I have to keep logging in, but I'm still here.
Okay. All right. No problem. You all understand the difference between debt financing and equity financing?
No, do not.
All right. All right, give me 1 second to go over this with you all. 1 second. All right. All right, so we just went over some of the ratios, right? But just to let you know, it is very important because when sourcing business financing, you cannot get it if you have a bad debt ratio, right? So when you're going and you're looking for money, always know what your ratios are because it can definitely affect the firm's ability to attract investors. Another thing that you have to always do is to stay ready for your business cycles. You need to know what your business cycle is. Sometimes you're going to have periods where you make a lot more money than other times. And you have to know when your down times are so that you're able to have enough cash flow until another upcycle comes. All right, so make sure that you make good investments, make sure that you're saving, make sure, as I said before, you're looking into stock, you're looking into real estate arrangements, because there's always going to be a time when you're not going to be making consistent money as an entrepreneur. And you have to look at other ways and your savings and your investments that you may need to fall back on when you're not making that consistent money. As a
You know, them thing that essential, you know, because sometimes you so be stuck in the practices that you don't realize how simple changes can help you to move forward. But you don't want to change things that you're just used to the way you've been doing things. You know?
exactly. So it's little mindset shifts. It's things that you have to do intentionally um to make sure that your business remains sustainable, right? So another thing I always tell persons is that stop just taking money out of your business. You need to pay yourself. So it it may sound hard and it may be like, no, but I can't pay myself. But in essence, by not paying yourself, you're just taking little money out of your business when you need something. And you need to know how much you want to be paid and take that amount out or take out an amount that is reasonable for the business and be able to stick to that. Because then your business is never going to grow if you don't leave money in it and you just keep taking out for your personal use. So you have to have a mindset where you say, okay, this is the amount I take out of my business, and this is the amount that I'm going to put back into my business as equity. All right. And keep those two totally separate. All right. So I'm gonna just cover again in terms of equity financing, right? So in equity financing, the owners of the investors are owners of the business to the extent in which they invest. So it typically consists of finance brought into the venture by stakeholders or owners. Investors in equity financing, you would hear them termed as angel investors or venture capitalists. So with equity financing, they will own part of your business to the extent that they invest. So say for instance, your company is worth $100, they invest $30, right? Just say they invest $50. Or $30, $50. They're going to now say, all right, well, that's 30, just simple math, that's 30% of your business. I want 30% of your business for what I've invested. Right? So that is equity financing, and that is how equity financing works. All right. Some benefits of equity financing is that there are no monthly payments. So as with a bank, you're going to have to pay them monthly. They're not monthly payments with equity financing. There's safety in bankruptcy. There's no obligation to pay if the business goes bankrupt, because now they are partial owners. They're not creditors in the business, right? They own piece of the business. So they're coming in and they want your business to grow because they now own part of it. Investors are usually a little more patient because they are trying to give your business time for it to become successful and time for it to grow. The
So
downside,
quick question, Miss Shani. Quick
yeah.
question. Is that choice based upon you or leniency of the bank? If you want them to invest in your business or as opposed to getting a loan from them?
Okay, so good question. So this don't have to do with the bank at all. So the bank is only going to do debt financing for you. This would be if you went to an outside lender, an angel investor, an investor in your business, then that would be where you could get equity. That's where you would give up equity in your business. So it's totally different. Debt financing is bank, equity financing is angel investors and venture capitalists. Yeah. All right. So some of the downsides with equity financing. So just think about it as somebody, an outside person who have whole heap of money and want to make some more money by investing in your business, right? So with that type, the owner needs to inform investors before making any sort of crucial decisions in their company, because now they own piece of your company. So you're going to have to tell them what's happening, right? And sometimes, and the higher the investment, the more of the stake that the investor wants. So if they go up to 50%, and that's half of your company, they definitely are going to want to know everything that's happening in your business and have some controlling stake on that. Right? So that's equity financing, not having to do with the bank. Now, in debt financing, that is bank financing. That's when you source funds from a lender. So when you go to a bank, they require repayment at a certain predetermined interest rate. Right? And this is typically business financial, which involves a bank. So in this case, the bank is going to check the owner's credit and other sorts of income from ventures to see how you're doing. And before giving the loan, the banks will check the books and they will check the business credits history. So that is why you need to make sure that all of your records are organized, because that's the only way the bank is going to be able to know if they can give you a loan or not. So once the bank approves the loan request, then the payment terms are set up, and then you'd have the appropriate interest rate. The advantages of debt financing is that it's just straightforward. There's no ownership. It has no control over the firm. The lender just wants to know that you're going to pay back your loan every month. That's all. It's a short-term relationship. Once you pay off the loan, you're done. If you're able to work out suitable interest payments, as I was saying before, when we were looking at the different statements and your interest, the interest that you're paying on your loan, when you're doing your taxes, those interest payments can be tax deductible. So there's so many things to like. I feel like the filing and TAJ with JMMB where I'm at, we always have workshops with TAJ and utilizing the online portal, and it's always such an important component for our business owners, just understanding that and understanding what to put in there that can reduce your taxes, because there are a lot of ways that people miss out on when they're using that portal. And just also in terms of Nita, as you said before, just if you're at nil, filing nil. So there's so many things that you can benefit from, but you just have to know about it so you can benefit from it. Debt financing also it allows for better planning because you could kind of forecast and break down your monthly payments and other expenses. The downsides, though, are that your inflows may not be, well, they're definitely not predictable, because some months you make a lot of money, some months you don't. But no matter how much money you make, you have to pay back that loan, and it's a set amount every month, and you need to pay it. So sometimes this would affect your payment. So you really need to keep that in mind. And that's why I spoke before about having emergency fund, having investments, having savings, so that when those difficult times come, you're able to pay. And one thing to do also is to prioritize any payments you have and any loans. So make sure your highest interest payments, if you come into tough times, make sure that those, say if you have a loan or you have a credit cards are ridiculous in terms of interest rates. Credit card interest rates are 50%. And then your loan, say you may have a loan, your loan payments are, interest rates may be 15%. You need to definitely pay off those higher interest rates payments before anything else, because those are going to get out of hand. So don't ever get a loan, don't ever borrow without knowing the interest rate attached to it, because it can get you into problems if you're unable to pay at a certain point. So always know what those are. And then if you are in problems at a certain point, you go to your lender and you let them know. Maybe they can consolidate your debt into a lower interest loan, but it's all
Quick question, who would you recommend to carry a better interest rate? Borrowing from the bank or borrowing from a lender?
okay, so lender, as in lender, you mean
I
what
don't
kind?
like another organization
All right, so
you can get a loan from, any other organization other than a bank. You can
okay,
get a loan.
so right, so credit union, if it's a credit unions usually have good rates for their members. But if it is a lender, like, and I don't want to call any specific names, but like if it's a small lender, they will give you your money faster, and they'll give you your money easier. But those interest rates are usually much higher than a bank.
Much higher, right?
Right. So you have to take that into consideration. Maybe in a bind and you need that money, but only take that money if you know for sure you could pay it back. Because if you can't pay that back, you're going to just always be in debt and always having to pay them back their fees. They come with some high interest rates. So credit unions are good, and then banks, and then those other smaller lenders. So just know why you're borrowing and
And
your
you can
ability.
afford to pay back.
Yes.
But also just on the potential for the business, right? The potential output. So yes, I can afford to pay this kind of payment. This amount of
Exactly.
interest, as opposed to, all right, no, I just have a little money, so I'm not buy it out more than we can shoot.
Exactly. Got it. Perfect. Yeah. Yep.
Thank you.
No problem. All right. So the downsides of debt financing, as I was saying, no, did I say this? Okay, no. Right. Yes. So I did say it in terms of your capital inflows may not be certain, and it's more difficult to get debt financing during tough economies. And that's when venture equity, venture capital might be more it might be better to try and get a venture capitalist, right? All right. Any questions on that part of it? Is it understood?
Yeah, man, good to go so far.
All right. Good. All right. So I would say this. So this is steps to business financing, but I would say this, it doesn't matter if you're going to get business financing. You just need to know this at all times. You always need to know what your financial needs are, right? So the first step to successful business financing is knowing your current financial needs of your company, right? So you need to know your common expenses, which includes how much does it cost to operate your business? What major investments in equipment do you need? And dealing with certain just regular expenses on the whole. And then always think about how are you going to expand? What are your plans for the future? Because remember when I was talking to you guys yesterday, I said you need to have your 5-year goal, but then you need to break it down into years and then you break it down into 3 months each. So what are your major goals for your business? Are you trying to expand your business? Are you trying to increase locations? And what does that mean in terms of money? Do you need to know expansion? Are you going to be able to do that internally? Are you going to be able to grow in and get enough money organically without a loan to be able to get to where you need to be? So you have to think out those things. And if you can't do that, you're going to know that you need to either get in some equity or get in some debt. So always think about your business and think about what's next. What are the plans for your business? So you need to understand what lenders assess. So as a business owner, considering debt financing, you have to prepare for that. Some of these assessments, well, bankers look at the 5 C's. So they're going to look at your character. Some of the things they look at is your character. Who are you as a person? That's a big thing. So you have to present yourself well to the bank. Present who you are, you know. You look at your character, they look at your credit history, they look at what collateral you're going to have to secure a loan. They look at your cash flow, and then they also have to look at your credit to make sure that the business is able to facilitate easy approval. On the other hand, if you're considering equity financing, you need to ensure that the business understands the steps to attract investors. So do you understand the market? Do you know if your business is scalable? You have to make sure that you're staying transparent with the investor. So all of these things, whether you're going for equity or whether you're going for debt, these are the things that these lenders need to assess. So some of the necessary documents that you're going to need is your tax returns. Make sure that you're up to date on your taxes, because even to open a bank account, you need to have a TCC. So your tax returns, your personal and your business financial statements. Well, your financial statements, your business financial statements. Well-prepared business plan. Oh, you all have business plans? You all have done your business plans? Well, I don't know if you would have done the financial part of your business plan, but do you all have your business plans prepared? Matthew or Nita?
We have stuff that we're putting together, not necessarily the financial part.
Okay.
But as far as the project go that we're supposed to be doing at the end, the community project, we're supposed to have all the financials presented for what we spend, so for the budget and things like that. So we're given a budget, but that's not specifically for our business. That's just more directed towards the community project side of what we do.
Okay, gotcha. Yeah, understood. All right.
Nita, where are you? Wait, how come you drive on the road and me in a class? Wait, how I go?
I'm not hearing from him, you know.
Yeah, I am multitasking. I'm in another meeting right now.
Okay.
All right.
All right. Some factors to consider when financing a business is your short-term and your long-term goals. So your short-term goals, help your business achieve your long-term goals. They ensure the venture stays motivated over time. Your long-term goals now, you need to ask the following questions. What's the business purpose and what are your future goals in the next 5, 10, 20 years? That's what I was saying before. You know, make sure that you have those long-term goals and then you put them into little short bite-sized goals that you can accomplish, you know, that they don't look too big for you, that you're like, oh my gosh, I could never do this. When you put it into 3 months, it's like, oh yeah, I can get this done. All right. Before a business owner decides to choose debt financing over equity, it's important, as I said before, to consider the interest rates. So you have to shop around, you have to look for the best interest rates. And even when you look at interest rates, you also have to look at the time that they're giving you to be able to pay back these loans, because that also helps. So it's crucial to compare all interest rates from different lenders before you make a final choice. All right. Before choosing equity financing, business owners need to understand that they are giving a part of their company to investors. If owners are ready to relinquish part of the company, it is advisable to not give up more than 49%, because you need to have majority ownership, which is 51% if you want to outvote the other party. So I would never say go 50-50, and because then you all will always be in a lock, right? So I even think 49% is very high. I mean, if you're definitely you're willing to work with the investor, go 40%, you know? And you keep the other 60%. So you just have to think about the percentages and think about what you want to keep for yourself, and if you want to own majority of the business. Requirements to borrow. You have to ensure that you understand the requirements, which would include, as I went through before, your debt to equity ratios, very important. You need to know what your fixed monthly expenses are. You need to have your business plan. All right. Your business structure, the pre-existing structure of a business can affect its chance to secure a loan. So for instance, business structures as partnerships complicate selling equity. So Matthew, when you were talking about in terms of how you register your business now, registration is very important, and how you do it, because and I see a lot of people, they start off as sole traders and they realize, oh my gosh, this isn't how I should have done my business. If I wanted a proper business, I should have registered as an LLC. Some people are like, oh yeah, no, it's a partnership. No, it's really a LLC. So I think a lot of thought and a lot of research needs to go into how businesses are registered before it's done. And then also the implications of how you register a business. Because if you register as a sole trader, you are that business. You are liable for any taxes. You are liable for anything that happens to that business. If you get sued, it's you, because you are the business, as opposed to if you're an LLC, you are separate from the business. So just understanding the different structures and knowing which one to do is very important, right? So business structure is it's very big. and it shouldn't be taken lightly. Your repayment terms, ensure that the repayment terms for the loan suits the business. So some loans don't require, some loans are interest payment first and then the principal, which is usually how it is. But some you can pay off the principal and then it reduces your interest payments. So you have to be knowledgeable and ask the bank about how they're structuring your loan. All right. So
Nice to
in terms of business financing, ensures a venture has sufficient funds to spend, to operate, and to invest appropriately. Sufficient funding encourages business growth by granting access to capital and protecting against any bad economic cycles. It is important to analyze which of the methods suits your business, the most. So always look at that and make sure that you understand. All right. Any questions on that piece of it? Anything that, sorry?
Go ahead, Miss Shani. Sorry about that.
Okay. Anything that I have gone over and y'all didn't quite get? Or just
Actually,
general?
learn a lot of new things because it was the first time hearing about equity financing and debt financing.
Same, Mr. Matthew. Actually learn a lot right now.
All right, awesome. Is there anything that you heard about in terms of finance that you're like, okay, I'm not sure about this and I need to know more about it? Is there anything like that?
All of it. That's why we're going to link up soon. Yeah, but it's very detailed class today. Even though I'm moving, I still retain a lot of the information. That was
Okay.
related. So, yeah.
All right. All right, we are wrapping up soon. So let me just show you. So I would want you guys for our coaching session, just so I have a kind of understanding as to where you guys are in your finances, in your business. Do you have the financial statements? How do you maintain these statements? Do you pay income tax? Do you have your TCC? Is it up to date? How do you deposit your revenues, your main bank? If you know your monthly sales, your markup, because and it's yes or no questions, If you know it, you know it. If you don't know it, then we can now talk about it and we can now get into it. Do you know which periods are slow? So once we know that, we know, okay, these months we can work out a plan as to what are you going to do in these months when business is slow. What investments do you have? What other things can you do? Do you have equipment that, as I said yesterday, do you have equipment that is just there, not doing anything that can be sold? Sometimes there's so many things that can be sold and so many things that we don't need that can help our business that we just have to think about it, right? Do you pay yourself a salary? Yes, no. If your answer is no, then during our session we can work out, okay, based on how much your business makes and based on how much you need monthly, have working out an equitable salary payment for yourself. In terms of what expenses you incur monthly, how do you purchase your stock? Are your sales growing, declining? Sometimes persons will stay in business doing the same thing, and at the end of the day, it don't make no sense. Like you're holding on to a business that doesn't make sense. And it's not to say that you have to give up your business, but you have to think about doing things in a different way than you just bleeding money because of a love for it. You can be successful, but you just have to put in the right strategies for your business, right? And you have to have that business mindset where you're out there, you're being a go-getter. You're trying to do as much for your business as possible, right? So we look at what are your main expenses? How often do you purchase stock? Are your sales growing or declining? What is the cause for the increase or decline? And do you have any debt? It could be formal or informal, because debt, you could be borrowing from somebody on the road. You could be borrowing a 5,000, 10,000 every week, every month. That's debt. And that is something that you need to account for, right? So I've asked these questions because I want you guys to think about it so that I know when we do our coaching that we're on the right path. I know for Nita, you want us to look at pricing. So I already know that I have to think about that before I come into the coaching sessions with you. So Matthew, Nita, is there anything specific to let me know now so that, when we go into the coaching sessions, I'm ready to help you guys properly?
Can we look at tool that can help the business to say like in a form of I say, all right, you need a website and so on and so forth in order to make the business a bit more profitable, as some people do not want to, suffer the inconvenience sometimes. So would we be looking at things like that as well, or just the financial aspect?
It's really financial, but I can look at that. I mean, I find a lot of times people are moving away from the website unless you can they can pay through your website or do certain transactions, because social media has kind of like the Instagram, and Facebook, and those more Instagram has taken away from the website. But yeah, we can talk about it for sure. Yeah. And we can tie it back into the finance and how you use
Right, because after looking at my business model, Canvas, a website is one of our channels that we use for communication, which is why I'd asked, and I had here you mentioned that the business model Canvas should look similar to our finances.
Yeah, it ties right back in, so definitely.
All right, Miss, thank you.
Okay. All right. So for you, in looking at the website and how it brings in money, and then also your pricing structure. I remember you were talking about your bundles yesterday versus specific line items. So yes, we can go over that for coaching. Matthew, anything specific? I don't know if Matthew hearing me.
No, yeah, man, no, Miss Janet. All good for me so far. I'm going soaking.
All right. Okay, so you see, I didn't keep you guys too long.